Tesla reportedly laying off hundreds of employees, including senior executives and the majority of its supercharging team. It's been a rough year for the company, with shares down over 20% so far, but Tesla has seen some near-term relief. Yesterday, shares rallied after China approved a crucial part of its self-driving technology. If we take a look at the past 5 days as well, you'll see a market move higher here. I believe last I checked, it was about 35% in a move higher over the past 5 days. And one of the huge things going forward from here is, and this is the last 1 month view, but going forward from here, one of the massive things that the company is going to have to pull the levers of is ramping up discussion about what new vehicles, they're using the 5-day move, what new vehicles they plan to unveil. This was a button that they had to, almost like the Staples Easy button, roll out the tell them about the new vehicle button. The new vehicle that has yet to be uncloaked or unveiled or given a price range at this juncture. And so it's a larger question of 2025, what does that hold for actually putting that vehicle into market, and at what pricing strategy, when they've already initiated a broader pricing war among many of the EV manufacturers out there, are they also shooting themselves in the foot on margin just to try and make sure that they're bringing on more customer acquisitions at this point to get more of that lifetime value?
Yeah, Brad, I think you're exactly right. And it's also very similar to what we've heard from analysts on our program, right? A lot of them have talked about those short-term issues. When you talk about EV demand, you talk about pricing, lots of questions about what exactly the next couple quarters are going to look like. But I think overall, the narrative around Tesla and why we saw such a huge jump following its most recent earnings report was exactly like you were saying, and also very similar to what we've seen just in terms of the pricing action of Tesla in the past. When you dangle some new shiny object in front of investors, in front of the street, you give something to be excited about, and that has oftentimes, when it comes to Tesla at least, been enough to offset some of those short-term concerns. And that was exactly what many analysts had told us was likely going to happen leading up to the call, leading up to the earnings results last week. And that is, in fact, what did happen when we heard from Musk and the rest of the team here over the last week or so. So again, I think the question is going forward, what exactly that roadmap looks like for Musk. Obviously, there has been some turnover, especially on the executive side. This report coming out, we also had some recent turnovers just about a week or 2 weeks ago here in terms of the executive ranks. So there is certainly an adjustment, a readjustment going on inside Tesla. What exactly the next couple of quarters look like, it could be a bit of a tough ride here, at least in the short term.
I'm old enough to remember that Cybertruck being the new shiny object that they were dangling in front of everybody, and that elicited a response, at least in the price action of shares. However, we later found out that from some reports, it rusts. So
exactly.
We'll see what takes place.
Right.
I'm not going to sugarcoat it. It wasn't the most exciting Monday we have had in markets here, right? But I think sort of zooming out, maybe one of the reasons it wasn't the most exciting Monday is because we do have a big week ahead of us with a lot of catalysts, and I think that's sort of taking the forefront to start the week here. Specifically, I was sort of struck reading through various amounts of Wall Street research today and the different macro strategists that we follow, all talking about treasury yields and all talking about the rise we've seen in the 10-year, and sort of the 10-year being the key to the direction. I think that's why we saw a little bit of a sell-off later in the day. I shouldn't say sell-off, a little bit of a drop in where we were on the day, as there were maybe concerns that we might have rising yields perhaps to open the market tomorrow. But I think overall, that seems to be where a large part of the focus is right now, not necessarily on earnings. There are not a lot of people coming out and saying positive earnings from Amazon and Apple can give us reassurances that the rally is going to continue. That doesn't really seem to be where the broader market narrative is at right now. It seems to be a lot of concern about what Jay Powell is going to say on Wednesday and what that does to treasury yields. Mike Wilson over at Morgan Stanley noting that he thinks unless Powell is dovish and perhaps aggressively dovish, we're probably not going to see the 10-year tick down any lower from where it is right now. And where it is right now, up above 4.6%, a lot of strategists just don't like stocks that aren't in sort of that large cap sector, and it sort of limits where you can go.
I mean, it's interesting too, because, that they're focused on that and not on earnings, because the reactions to earnings have not been fantastic. Or companies have been beating.
Yeah.
But stocks have not necessarily been performing very well in reaction, as we've talked about.
Yeah, and Wilson pointed out in his note that the earnings surprise, the average earnings surprise for S&P 500 companies this quarter is at 9%, which would be the best since 2021. but the reaction he described as, quote, muted. Stocks really haven't done that well. And I don't know, Julie, maybe yields is playing a part in that, or just the overall, we'll call it macro uncertainty, which is what we like to say.
Vibe shift.
When we don't know why what seems like a good read isn't moving a stock that much, you sort of fall back on that. But maybe that is playing a little bit of a role right now. Okay, earnings are decent for this quarter, but where are things headed with rates? Are we going to get any level of a cut this year? Or are we perhaps shifting somewhere to maybe they'll start talking about a hike? I think people are just in a little bit of a teeter-tottery place with it, and that makes it sort of hard to make a decision on earnings.
Right.
Unless you're Tesla, right?
Yeah, unless you're Tesla, which was the big stock story of the day. Not an
Yes.
earnings story, obviously, or at least not directly
Not today,
immediately.
yes.
But you put in a call to our friend Ihor at S3 to
Yes.
figure out, was part of the move that we saw recently, which is a big upward move in the shares, was it a short squeeze?
And Eeyore said it wasn't necessarily a short squeeze. That's not how he would define what's been happening in Tesla shares. But we have seen shorts lose a massive amount of money over the last week. So shorts have lost over $5 billion in the past 5 days as this stock has gone up, as you were just seeing on your screen, over 30% since Tesla did report earnings. We should note, though, it's been an interesting ride for Tesla. Of course, this stock, people are very bearish on the stock going into earnings. Shorts are still up several $billion on their short positions for Tesla on the year. So that gives you a little bit of point of reference of how bad the stock has been doing. And to me, guys, the most interesting thing that S3 pointed out, 2 million new open short positions in the last week as the stock has been going up. To me, that sort of speaks to where the Tesla story is at right now, right? You're either bought into the AI future and sort of the lofty goals, or you're still sitting and looking at the fundamentals, as plenty of analysts we've spoken with in the last week are, and saying the story just isn't there. And I think it's interesting that even as the stock has sort of fought back here and had a nice week, there are still people coming in and saying, I'm not buying this story.
Yeah, well, it was interesting, and we put this question to Dan Ives about how the team at Canaccord, and they do really good work over there. They were kind of posing that question, or maybe are we through the worst, at least for a little while here, is something they're putting. Now, they are bulls, but it was interesting just kind of put that out there.
Yeah.
Even how Dan has flipped in the last month, our friend Dan Ives over at Wedbush. I mean, he called it a turning point at the beginning of the month, right? And now we're sort of a month.
Turning to bad.
Yeah.
And now he's back to good.
Now he's like,
Things are
they
right.
kind of made out okay. So I guess we'll wait and see. And so will those short investors,
Yeah.
for sure.
There's the closing bell on Wall Street, and now it's market domination overtime. We're joined by Jared Blickery to get you up to speed on the action from today's session. Let's start where the major averages ended up. And actually, we recovered some of those losses that happened right around 3 p.m. when we got news about the larger than estimated borrowing plans of the U.S. Treasury. The Dow still managing to go up about 147 points by the end of the session. The S&P 500 finishing higher by about 1/3%, as did the Nasdaq. So all three major averages higher. Not a barn burner kind of a day, but still finishing up. Just want a quick check on trending too, to get one final check on how Tesla did before the end of the day, finishing up by 15% here. So big increase there, obviously, after we had the news of Elon Musk visiting China and getting approval to roll out full self-driving FSD there. SoFi Technologies was our earnings loser of the day, down 10% after that company came out with a forecast that was a little bit below what analysts had been anticipating. So that's what happened on the individual mover front. Some highlights. This check sponsored by Tasty Trade. Now over to Jared for a closer look at the action.
Thank you, Julie. I want to stick with Tesla for 2 seconds here. I'm going to put a 4-day chart on. You're going to see it's up 34%. That is the best 4-day run in about 4 years. You'd have to go back to 2020. So on that note, let's pivot to sectors here. Consumer discretionary, which, by the way, Tesla is one of the biggest members next to Amazon. XLY ended up 2.35%. Following that, we have utilities and real estate. So two defensive sectors, two interest rate sensitive sectors. Those are following. Then we have materials, industrials, and energy to round out the top row. Communication services and financials were the only two sectors in the red. And let's take a look at the NASDAQ 100. And indeed, Alphabet dropping a little bit after its outperformance last week. You can see it's down 3.37%. Meta also in the sector down 2.4%. Microsoft is a tech stock, but it was down 1%, and Apple 2.5% to the green side. That's something we haven't seen a lot of recently. Looking forward to those earnings a little bit later in the week. And here is my leaders board. Now, ARC, that would be disruptive tech, unprofitable tech, 2.38% in the upper left, followed by solar. Then we have gambling, biotech, Korean stocks, emerging markets, small caps. Really interesting mix here, but not really anything taking my eye far and away off the page here. GBTC, that would be my Bitcoin play. That's the biggest loser here. Also looking at regional banks, KRE down 0.8%. Interesting ahead of that Fed meeting that we have Wednesday, but nothing too big jumping out here, Josh.
Tesla has finally received the long-awaited full self-driving approval in China this coming following Musk's surprise visit to Beijing this weekend. And joining us now for more on what this means for the EV maker, let's welcome in Wedbush Managing Director and Senior Equity Analyst Dan Ives. Dan, it is always great to have you on the show. So I'm looking at this stock, Dan. It is just roaring higher on this headline. Let's start there, Dan. Does that reaction make sense to you?
I think it makes complete sense. Because look, Josh, this is a watershed moment. For Musk to get FSD in China, it's a game changer. This is something years in the making. No investor thought this was going to happen for the next year. He gets back on that plane from Beijing, drinking mimosas. This was a trophy case win.
Dan, why though? Because all of the other electric vehicle makers that are already competing with Tesla in China, they already have autonomous driving capabilities that have already existed. There's been, of course, price wars going on in China and stiff competition from those other electric vehicle makers. If I'm a Chinese consumer and I'm thinking about buying a car, is FSD really the thing that's going to be pushing me over the edge to buy a Tesla versus a BYD or another car?
Yeah, it's a great question, Julie. I'd say there's two reasons why this is so important. One, FSD, the autonomous vision, number one, in our opinion, being Tesla over the coming years, they needed China. In terms of just from a data perspective, when you think from an AI angle what they're doing, they needed China.
But we don't know if they can use,
global.
sorry to interrupt you, we don't know if they can actually, how they can use that data, right?
Well, yeah, but ultimately, if you look what Musk's been able to do, remember years ago they said he'd never be able to build a factory in China. Now look at Giga. The point is, they need Tesla as much as Tesla needs China because it's the trophy case. You look at Apple, you look at Tesla, two of the best brands in the world. That's why they allowed this with Baidu as a partner. And the reason it's so important is that Tesla almost had one hand behind its back not having FSD in China. Now they have that. And I believe what's starting to get factored in here is a demand. I'm not saying the next week or two, a demand recovery in China. But betting against Musk, it's like betting against Brunson in the playoffs.
And Dan, ultimately, it seems like, if you're a Tesla bull, are you excited because you ultimately think, listen, this potentially, the impact this has on subscription fees, on maybe even licensing this software to OEMs? Is it a margin story, Dan?
Yeah, John, I think two things. One, when you look at Tesla China, it expands the TAM. What they're going to be able to do there from autonomous, not just about the next 6-12 months, especially with Baidu. Where does this go over the next 3-5 years? I mean, when you think about robo-taxis and the autonomous vision. Two, this shows you're really starting to see Musk and China, that relationship get tighter and tighter. And that's a great thing for the stock. That's important because as we all know, that's been the biggest overhang here. And that's why right now, the bears on Tesla, which so far have won this year, they're going back into those hibernation, into the caves.
Dan, it's my understanding, and maybe I don't even know if you know this, but maybe if you do, we talked a few years ago to one of the other Chinese automakers who had some autonomous driving capability, and it's my understanding that the regulations are a bit different there, that you have to sort of take a course, right, before you can get an autonomous vehicle or partially autonomous vehicle. Do you know about that, and is Tesla going to be subject to that as well?
Yeah, look, I think these are things that all need to come out in terms of the next steps. But I think the important thing is this is a broader global vision. And I think for China, this is almost a shot across the bow at the U.S. in terms of on an FSD, you can see them on the fast track versus what's happening here. And Tesla, that's the golden goose. They're going after China. They needed FSD. It's a key part of the long-term story. And when you see the stock up, I believe it's just the start of the longer-term vision now taking hold.